Hello, this is Daniel Grady with a quick look at the markets for today, Wednesday, June 25th. We have a pretty quiet day on the economic calendar for the European session, but then at 12:30 GMT we have GDP data from the United States. This is a revised data from the first quarter GDP, which was initially posted at 1%. It dropped 1%, and now the contraction is projected to be at 1.8%, mostly due to the bad weather that we had in the United States during the beginning of the year. Also, at the same time, we have durable goods, transportation, and personal consumption data, which is an important indicator of the American economy, so that could generate some volatility in equities. Also at 1:45 in the afternoon GDP, we have Purchasing Managers Index Composite and Services, which also gives some insight into how the American economy is performing. That could also generate some volatility in equities if we have significant miss. Both of these data is coming out before the market open, so they would probably shape how the markets are going to perform during the American session. Going over to the S&P 500, we had a drop in the S&P 500. Yesterday, initially it had moved higher, but then sometime in the afternoon, about midday, we had a report from the Wall Street Journal saying that Syrian warplanes had bombed in Iraq, and this generated some concern over the escalating tensions that we have over the escalating violence that we have in Iraq. Iraq is the second largest OPEC producer of petroleum, and any disruption in supply could provide a significant increase in oil price, and that would have an impact on the economy. So we had a drop here in the S&P 500. During the Asian session, Asian stocks also continue early today. Asian stocks continue to move on the downside. It's coming off of a 6-year high, so it's understandable that we have some form of correction. Also, we don't have any major data coming out from Asia recently. And then going into the session today, S&P 500 futures are trading down by 0.1%, which is an indication that we might be looking at, a somewhat neutral to negative outlook for the markets today. The euro is keeping above its support level, which we have at 135.80, and then we have resistance at 136.60. Also important to point out that with the geopolitical risk that we've been having, there's increased demand for the dollar, which is generating dollar strength, which we don't have that all that much reflected here, but that does put some negative pressure on this currency pair. It's better illustrated here when we have the pound. Pound had a significant move on the downside yesterday, reflecting that dollar strength. It broke through psychological support at 170. Then we have technical level here, which is the 100 Fibonacci level at 169.70, and it's just a hair below that at the moment. If it continues to move on the downside, we have support here at 169.30, or it might retrace back towards support at 170.60. Sorry, it might retrace back to resistance. Resistance here is at 170.60. The dollar yen is tracked sideways. The dollar as well as the yen are both considered relatively safe haven assets, so the dollar strength wasn't all that is well reflected here in the yen, keeping above support at 101.75, resistance 102.25, as it has been the tonic for the last several weeks. And then finally we have gold here. With a risk-off environment, we would understand a interest in the price of gold. That increase in price in gold is somewhat offset by the increasing strength in the dollar, so we don't have all that much change in the actual price of gold. We're looking at support at 1,310, resistance at 1,340. And that's it for today. Thanks for watching and happy trading.